Our next guest says not so fast. Let's bring in Laura Martin. She's senior analyst at Needham. Laura, by the way, I mean, look, $350, $120, that's not as bad as estimates that the iPhone could cost $3,500. So the numbers do seem a little bit all over the place.
I mean, I think the thing that's incredibly important about tariffs is that they add about 50% to the cost of Apple. And so what happens is your $7.32 EPS estimate loses $2 if actually China stays at that 54% and India stays at 26%. So it's not the revenue that's the big question that tariffs brings. Tariffs brings this big question about what are the cost of goods sold and therefore how much falls to the bottom line and how much free cash flow does Apple have compared to what consensus estimates are. And most of us aren't changing our estimates because the situation is so fluid.
Oh, sure. Is there any way in which they can absorb this? I mean, at least in some meaningful aspect, absorb it into their bottom line?
I mean, we're assuming that they don't raise price, and they've said they're not going to raise price. So they're going to hold U.S. prices as steady as they can. But if they do that, then their costs go through the roof. Yes, they can pass 20% of the cost increase into consumers' hands. And so your iPhone, all those numbers you just gave, increased by hundreds and hundreds of dollars, which drives inflation in America. So we end up with higher bond yields.
Why don't you think this is a buying opportunity for Apple?
Oh, this isn't the worst case. This is the impact of a negative $2 on EPS for this year of $7 is where most analysts are, is only the direct impact of the Trump tariffs. If China retaliates or if they invade Taiwan, much worse for Apple, right? So there's lots of worst cases for Apple. But again, it's just so hard to know. You know, it's so hard to know what's actually going to happen with tariffs a week from now, 4 weeks from now. You know, U.S. is 25% of the global GDP. So, you know, anything that hurts trade hurts us $1 out of every $4. So
we just got a headline as well from the White House. Carolyn Leavitt at the press briefing saying the president believes the U.S. has capability to make iPhones.
Yeah, I don't think that's a thing. I mean, our estimates are there would be 3x, whatever you thought, just quoted the price, 3x that. And you couldn't do it immediately. It takes years. India's taken like 3 years to get up to 14% of their iPhone volumes.
Right, exactly. And this has raised a lot of questions about the workforce. And can you literally, even if you had to turn the switch tomorrow, you know, kind of turn to the American workforce to make these phones in the same way? I don't know whether anyone can figure that question out, but this is supposed to directionally tell us what's going to happen with EPS in the meantime. And I guess, like you said, if you went from $7 to $5 this year.
So if we were moving estimates and analysts aren't moving estimates because of the uncertainty, yes, we would go from $7 to $5. And that's just on the Trump tariffs alone, not anything worse than that yet.
What are the reverberations, Laura, you think, for the rest of the companies you cover?
So consumer confidence affects everything in advertising, and advertising has 80% margins. This morning, there was a study out in last week, 43% of people, CMOs, so chief marketing officers, said they were going to cut back spending in linear TV, cut back spending in social media, and cut back spending in like analog media, like yourself, for example, because that's what they need to offset the tariff cost increase. So they have a deliverable to their parent company.